I spent years studying ICT, even when I was already profitable with another strategy. In the beginning I blew account after account because I thought I had it. I thought I understood ICT after just watching a couple of his videos. Now of course, this wasn't the case. There are so many deeper levels that I needed to learn in order to completely understand it. But I just knew that this was it. And that I needed to learn this and I would never switch strategies again. So in this video I'll make sure that you understand all the ICT concepts that you need in order to be profitable. But before we do that, I want to tell you why that is so important to me. It was April 2021. I was visiting London to trade on the trading floor with a bunch of other traders. Some were experienced and some were more new to trading. But you can always learn from people doing the same thing as you. And it was fun when I visited, but unfortunately the company lost their reputation pretty quickly. And I was there with some of the biggest names in the trading industry today. I will always remember this one girl at the office. She was from the Netherlands but had been living in London for years. And as I'm from the Dutch-speaking part of Belgium, we got along pretty quickly. And one day she told me about a channel that she has found, the Inner Circle Trader. It had like 20,000 subs, vague and boring thumbnails, and videos that would last over 2 hours. And at that time, my monkey brain was like, I can't do this. I do not have the patience to sit through these 2-hour lectures. Let me just go to something else. Until one day, back in Belgium, I saw another video of him popping up. And for some reason, that time I did get intrigued. I got so invested that I spent hours and hours watching and studying the videos. And at one moment, everything finally clicked. Now, in the beginning, I was still blowing accounts because I went into this, let me say, too prematurely. So we can say that it cost me a lot of time and effort to understand everything. And that's why I'm making this video, to cut out all of the fluff and bring you the good stuff right away. So let's get into it. So the first thing that you need to know is that liquidity is absolutely the most important thing. This will be step one that you need to discover in your learning ICT trading journey. And the reason for this is that this is what literally drives the markets. The markets will go from DOL to DOL. And DOL means a draw on liquidity, right? So market goes from DOL to DOL, and that's basically how it moves. So it is in your best interest to know and to realize and to study how this works. So when we go to the charts in a second, I will show you exactly how it works, exactly what to pay attention to, and exactly how you can use this to your advantage and understand the markets better. So these are our recent charts on Euro USD. And to know how to trade liquidity, you have to know what liquidity is. So liquidity often lays above previous highs, above previous lows, in fair value gaps and all the blocks. And basically what it does is that it pushes the market in one or the other direction. This is because orders get filled, and these can be stop losses, take profits, buy stops, sell stops, or limit orders, meaning they will get a lot more liquidity in the market for a certain direction. And that is then what creates the move. Now, if you get into a trade, you also have to get out of a trade. And then you want to target the opposite liquidity target, because this is again where a lot of stops are, a lot of orders are, so that you, with your big bucks, you can close your orders. Because for us retail traders, it doesn't really matter where we buy, where we sell, right? But if you're trading with a lot of money, and I'm talking in the billions, then you have to be really thoughtful of where can I enter, where can I get out, and what makes the most sense for my position. So let's say we start right here. We can see that price moves underneath the previous low. Now you know, okay, this one has been taken out, and we see that we have displacement in the other direction. We are moving upwards. So you're gonna ask yourself, okay, if I'm buying right here, where can I close my orders? Where is the opposite side liquidity? Gonna be looking at previous highs. Could be above here, could be above here, could even be above these highs, right? And to know which high is relevant, you also have to know what role this right here plays in the bigger picture. So if you zoom out to a 1 hour, for example, you can see that price is going up higher, going lower, and this was basically the pullback, and now it is moving up higher again. So another tool that you can use, and we will get to that in a second, is the Fibonacci tool. The Fibonacci tool is this icon right here. You can find it in the bar on the left. And once price gets into the 61.8 to the 70.5 region, it's often a good place to stop the pullback. So basically to turn around from. And if we're looking bigger picture, we can see that we reached that point. Knowing that if we're looking for a continuation, this right here is probably going to be the next one you want to target. Now, let's say you are inside of that pullback and you basically know, okay, we want to go down. You're going to be looking for the opposite way. So right here, liquidity being taken out from these highs, very, very slightly, but we're moving lower. You know, next target is the previous low. Price takes this one out, starts moving up higher again. And what you will see is that price will all take out liquidity from this price leg or from the accumulation zone that it created once that smaller pullback right here is over. So right here we have the accumulation zone, price takes this one out and moves down lower again. Next target being this low down here, price takes it out, and now as you can see we take out this previous high right here. We also have that accumulation zone and also the push above before moving lower once again. Price takes out the low, we have accumulation zone right here, it's a very big one, but price takes it out once again and moves down lower. I want you to see it like a ping pong situation where we're always going from one side to the other. Price moves up higher, moves lower, doesn't break it. Once price is able to take out this high once again, we are able to break the lows. Okay, and then this is basically one big consolidation zone that we have to move out of. This one big consolidation zone, you can see that it gets raided later as well by a new wick. Okay, so this is a news wick, and right here you can see that we're turning around because we reached that 61.8 level. Price is now moving up higher and it's going to be doing the same thing in the opposite direction. Price moves up higher, moves lower, price gets taken out right here before we move up higher exponentially. Price moves lower, consolidating, price takes out the consolidation before moving up exponentially. Price is moving down lower. Right here it does not really take out a low, perhaps this one it did take out, but it does react to the previous high, right? So that's also something that I pay attention to. When we retest the previous high is a good place to start buying again. Now, as you can see right here, we have a change in the state of delivery. We are going from higher highs and higher lows to lower lows and lower highs, okay? And we can see that price took out this high right here, but then did not create a new higher high and started moving down lower. Same thing right here, took this one out and moved lower. So that is why liquidity is very important, because it will tell you literally everything. And all the other things, if you did not understand what I was doing, I will get to that in a second. Because the second thing that I want to talk about is market structure. And market structure is something super important because you will know if we are in an uptrend or in a downtrend. On a zone, that's not that difficult to see, right? Price is moving up higher and it's creating these higher highs and these higher lows. Right here, price moving down lower and it's creating these lower lows and lower highs. Now what is important is when this one changes into this one. Meaning that once you go from higher highs and higher lows to lower lows and lower highs, you have a market structure shift right here. And this is something very important because right here you can make a lot of money once you know the direction and once you are certain of the direction. Because if you just understand market structure and if you just know how to find the market structure shift, you will be correct of your bias 95% of the time. And that is, I would say, step one into having a profitable trade. So if we can see right here, the place that we discussed about, we are purely looking at it on a 15 minutes. You want to do this on every single time frame so that you know which direction each time frame is trading into. The higher the time frame, the stronger the confluences and the bigger of an influence you have to anticipate on that it will have. For example, if the weekly is in an uptrend like it is right now, you know that if price is going to move lower, it will probably just be a pullback. It will be a pullback on a daily time frame, on a 4-hour time, probably also on a 1-hour time frame. But then let's say once we reach this point right here, you can expect price to turn around again. You always expect price to follow the highest time frame's direction, and only if you get a market structure shift here, you're going to be looking for price to move down lower on the weekly time frame. I want to quickly pause the video to talk with you about Funded Next. My opinion, Funded Next is one of the best prop firms in the game. They're super reliable. They reward you even in your challenge phase, which is super awesome, especially for beginners. They offer a stellar instant, so you instantly have your account. It's new, by the way. It's completely game changing, as you have an on-demand payout and no consistency rule. You have a stellar light, perfectly for beginners. You have a 1-step, you have a 2-step. Literally, the opportunities are endless with Funded Next. And it is the one that I personally use as well. And now they introduce a new feature, which is the AI agent. It's in the beta phase right now, but it has been launched today actually, the 28th that I'm recording this. And literally you can ask them any questions that you have. It's the first prop firm to do it. I think they're always in for their support and they try to be as supportive as possible. Even if you don't get your payout on 24 or 48 hours, you'll get a $1,000 bonus. So if you're going for prop firms, you want to go for a partner that you can work long term with. And I think Funded Next is the perfect one to do so. There's a link in the description that you can check out, but also a discount code to make it even cheaper for you. Let's get back to the video. Now, this does not mean that we're not trading the other direction, because right now the weekly is bullish, but as we can see, price failed to break this previous high. And that is something super important to notice. A lot of people know this. They know the market structure, they know the market structure shift, but they never pay attention to what happens if price does not break that high, right? And does this. I see very often that is a good indication that price needs more liquidity to push up higher, or it is going to turn around completely. So, in this case, for example, right here, I would say price needs more liquidity. And even if it would turn around completely, you're still trading in the same direction, because you are looking at liquidity at these levels, these lows perhaps, or these lows. Now, if these lows were to be taken out, you also have a market structure shift on the daily time frame, right? Because this low is then going to be taken out. Then a lower high would be created, a lower low will be created, and you have an official market structure shift on the daily time frame. So I would say it is for everyone's best interest, weekly wise, that we are not breaking this low if we are remaining with a bullish narrative. So then we're going to be looking for, okay, what is then the next best liquidity point inside of this price leg? It is this one right here, right? Because this is, I would say, a strong low as well inside of this price leg that can be rated. So when price pushes down lower, I'm waiting for it to push beneath this low, probably pause for a couple of hours, maybe days, and then break out of that and move up higher again. If it doesn't do that, then I'm probably looking for a continuation down lower to break this low. And I'm already this far only by looking at liquidity and market structure. Now, let's talk about the power of tree. The power of tree is made out of accumulation, manipulation, and distribution. These are basically the three market phases that the market will go through. So what you will often see is that price accumulates, so it goes sideways, it manipulates, it goes the wrong direction, and then it distributes. Okay? And this is what you will see pretty often in the markets in some shape or form before it makes a huge move. So same thing right here. You have accumulation, you have manipulation, and you have distribution. Now, it does not always look this clean, obviously. Sometimes it is in a bigger way, like this, but still, this is how the market moves pretty often. Now, what you want to be doing, and this is actually the trick behind it, is you want to trade from internal liquidity and you want to target external liquidity. Now, what is internal and what is external liquidity? The easiest way to find it is you go to the higher time frames and you're going to be looking for the highs and the lows. Now, the highs on the higher time frames, let's say this one and this one, these two right now are external liquidity. All the highs and lows in between are internal liquidity. Now, the lower the time frame you go, also the lower the time frame you want to switch your external liquidity to. So let's say, for example, I'm trading on a 15-minute. I'm probably not only going to be looking at these 2 points right here, the high and the low for my external liquidity, but also at this high and this low, as this is right now my previous and my current price leg. So you always want to take a trade from internal liquidity and target external liquidity. So for example, when price takes out this high right here, you want to take your position from here, put your stops above that high, and you want to target the external liquidity that is probably this low combined with this previous high down here, right? This then would be your trade. Now, if you don't want to hold it open for this long, or you're not aiming for absurd risk rewards like this one, then aim a little bit lower. Aim for the previous low. Aim for the previous low in your previous price leg. Alright? Market always moves from internal liquidity to external liquidity, and as soon as you can realize that, the better your trades will be. Now, to make sure that you're entering the right way as well, I want to introduce you to 2 entry models. Very, very simple to follow. The first one is the inverse fair value gap. What is an inverse fair value gap? An inverse fair value gap is basically a fair value gap the other way that you're expecting price to go to, and it gets disrespected. So, for example, right here, we have a fair value gap that is bullish, right? It gets completely disrespected. As you can see, we trade completely through it. And as soon as you do that, as soon as you have a closure underneath that fair value gap, you can take your position like this, right? Stops above the high, and you're going to target that external liquidity point. I find the inverse fair value gap to be super, super accurate. Now, sometimes it happens that you have an inverse fair value gap and also a normal fair value gap overlap, right? We call this a BPR, a balanced price range. And what I very often see is that price comes back to that balanced price range like a charm. You can take your entry from there, and you can take your position down lower. Now the other one that I want you to pay attention to is the market structure shift plus fair value gap return. So we can see that right here in this example as well. You have a market structure shift as soon as that low gets broken, because at this point you're going to be going from higher highs and higher lows all the way to lower lows and lower highs. Then you also want to be looking for a fair value gap in that price like that created that market structure shift. So we have a fair value gap right here. You take your entry on this fair value gap, put your stops above the previous high that you have. In this case, it is this one right here. And you take your position down lower. These are two very, very good entry models that I want you to pay attention to, and only enter if, of course, all the boxes on the higher time frames are ticked, and also if you have these entry signals. Now, two major important things that I want you to include in your trading to make you such a better trader, and it will basically make you unstoppable over the long term. The first one is time and price. I want them to be aligned, meaning that I only want to take positions during times that matter and during times that make sense. For me, for example, I only trade the London session. To be more specifically, I trade the London kill zone, which is the opening of the London session. So my time zone is UTC +2, and for me the London kill zone would be between 9 and 10 a.m. I've seen that this is for me the best time to trade according to my results. So what I will be doing is I only will be looking for trades during these times. And then I want to see all of this happening right here inside of that time as well. You can also trade the New York kill zone, and this is basically going to be doing the same. You're going to be looking for trades that happen during the first hour of the New York Open. To give a nice example of this, right here we see prices in this big accumulation zone, but if we zoom in, we can see we're also in a smaller accumulation zone. So London has been accumulating, basically going sideways. Then we have that manipulation phase right here during New York Open, the first hour of New York Open. Then price pushes away, creating a fair value gap. You have a tap in the fair value gap, as even a BPR, as you can see, and price starts to move away from there. Very nice example of combining time and price. Now, the last thing that I want you to do is I want you to give it context, and I want you to make a story behind it. That's what I always say to my students: make a story behind the trade so that it makes sense. Right? And why it is so important to make a story is that you always stay on track with what is the bigger picture, where is price trading towards to, and where is price coming from. These are some things that you always want to ask yourself. So right here, for example, we see price push up higher, we're moving down lower. We did take out liquidity from these double lows right here. We did have a major push, but right now we need more liquidity because we can't push past this. Let's say we are still trading here. This is back in 2009, by the way, but this is a good example. Then you're going to be asking yourself, okay, where's the next liquidity that price could come to in order for us to take it lower again? Are we going to break this high? Probably not, because we would switch the whole direction. But there is a very big fair value gap. There are previous highs. Could be an amazing place to sell from. And as you see, once we sold from there, it was basically one way down all the way through these lows. And that is something that you always want to ask yourself. Where are we coming from? Where are we going towards to? And the same thing here as well. Price consolidated right here for almost 3 years. Pushed up higher, pushed lower, was unable to break this low. So we need more liquidity. We have more liquidity in this fair value gap up here. Price moves into it, gets the liquidity that needed, is able to push down lower, completely take out everything. Is now pushing up higher, creating this accumulation. Is now moving lower, the manipulation, create a higher low, and are now seeking for, again, new liquidity. Are we going to find this in these fair value gaps? Could be, but it could also be that we are now going to move up higher past these highs as well. So if price is going to do something like this and it's going to stall here, we know we need more liquidity and we need to find it somewhere here underneath this low, in this fair value gap, or underneath this low in order for it to make a chance to move up higher, right? And that is the story that you want to create for yourself, to really be invested into it and really know what price is doing and make sure that you're always on the right side of the market. Guys, I hope you enjoyed this video. If you have any questions, please leave them down in the comments below. I will respond to every single one of them. Consider subscribing if you haven't already, and I hope to see you in the next one. Bye bye, guys.